Back then we had worries about prices going down, expressed by about 55% of agents. They said that's what buyers were worried about, and now we've only got about 23% of agents saying those are the sort of worries that people have. Well, hi again everybody. Today what I want to talk about is how this lockdown differs from the first nationwide lockdown of March through to May last year. The key difference is this. Last time, we hadn't the foggiest idea what happens during a lockdown or what happens afterwards in terms of one's economy, labour market, house prices, construction, etc. Now, we do know what happens. What happened back then was house prices on average fell by 3%, and since then they've soared by 34%. House construction has boomed, unemployment rate went up a little bit, and now it's right back down to where it was ahead of learning about COVID last year. What that means is that our feelings, our attitudes, our fears this time around are very different, and I can pick up all of these sort of things from the monthly survey which I do with REINZ of real estate agents all around the country. And the first survey I did was when we were in lockdown last year in April. And so I'm just going to run through some numbers here just to illustrate how the current situation is very different from back then. So let's just start with FOMO, fear of missing out. Back last time around, a gross 35% of agents were saying, they're seeing FOMO on the part of buyers. Now, the most recent result done just a week ago, 71% of agents saying they're still seeing FOMO. That's about the highest result, in fact, for the past 5 months. Back last year, we had a net 17% of agents saying prices are falling. Now we've got about a net 59% saying prices, in fact, are rising in my area. Back then, we had worries about prices going down, expressed by about 55% of agents. They said that's what buyers were worried about, and now we've only got about 23% of agents saying those are the sort of worries that people have. Now, a key reason, of course, is that people, the buyers, are not as worried about jobs, employment, income as back then. So last time around, we had 48%, and I think a gross 48% of agents saying buyers are worried about losing their jobs. Now it's only 12%. Back last time, we had listings as a source of concern for buyers expressed by about 50% of agents. Now it's 79%. The availability of listings is a heck of a lot worse. In fact, now they're about 30% lower than they were in February of last year, ahead of COVID. There are some big differences. Back then, we had a gross 60% of agents saying investors are motivated by hopes of finding a bargain. That now sits at just 20%. So no one's really expecting that the price is going to fall away this time. Will prices soar as they did last time? No. We're not seeing some fresh cuts in interest rates. We're not seeing the LVRs removed. We're not seeing a fresh closing of borders and $10 billion worth of spending going from overseas travel towards domestic travel. And all I can say is that as we head into spring now, we are going to see, I think, prices rising, but the investors out there better hope the market does not go ballistic again, because the Reserve Bank has got tools to use, and they probably will start using some of the extra ones late this year. And let's not forget the government has hung its hat on improving housing prices out there, affordability. It's going the wrong way. If the market booms, I wouldn't be surprised if they have some new tax announcement even before the end of the year. We'll see how it goes. All the best out there.